June should be nuts. It does coincide with the stated end of QE being the end of June. And I see some folks might want to take a quick break. Maybe we can talk about that in a few minutes. The quantitative easing won't end. It can't. It can't. And the folks that think that somehow this quantitative easing, this printing of money, is a function of economic growth, that it's there to, I mean, that's nonsense. It's a function of funding the United States government. And without the Fed in the market, which, as you probably saw, PIMCO estimated the Fed's involvement in the Treasury market at 73%. Without the Fed actively in the Treasury market, there is no Treasury market at this point. They are the Treasury market. So without them, where would rates go? 5 years, what, 3.5, or 10 years, 3.5%? Where would it go? 10%, 12, 15? And you couldn't, the economy would then collapse, so tax revenues would collapse, and you would only further have to do more QE. So it's not going to end. It's not. They may dance around, and maybe we'll get a sharp correction at some point in June. They may dance around and try to make it look like it's going to, but it's not. I mean, you can't. So, anyway, June will be fun, provided we survive May.
Well, thank you very much.
Sure.
Thanks, Turd. What we'll do is we'll just have a quick break. Whiskey bottle's a bit dry, so let's have a quick 3-minute break.
Okay, I'll be right back. Thanks.
We are with Turd Ferguson from tfmetalsreport.blogspot.com. Mulder, you have a question for Turd.
Yes, Turd. What is your favorite precious metal to own at this point in time, and why is it your favorite?
My personal favorite is silver, for many of the reasons that we've discussed. The potential for just a parabolic move upward, what some would call a signal failure, where the price of it moves in double digits every day for a period of time. Because of that very real potential, which would come from the struggles delivering silver on the COMEX and the realization that they're near the silver that has been contracted out, I trade silver. If you don't like the volatility, however, people should own gold or trade gold, because silver is going to have, it's going to have some tremendous downdrafts, which will present compelling opportunities to buy it. It could get to 55. It could be pushing 60 by the 10th of May. Who knows? It could then turn around and in a week be back under 50 and at 45. And if you're not a ardent believer in the long-term fundamental story, that could shake you out and really rattle you, and you'd think, God, I'm never trading that crap again. Jesus, God, I lost 15% or 20% in a week. And so that might freak you out, and you'd never go back and thus not be protected. So,
okay,
great. Back to your buck, own silver.
Awesome. Okay. You partially already answered this one, but I'll ask it anyway. Do you see any advantages to owning gold over silver?
Just because of that ratio, it is easier to own it to protect wealth. Again, and silver has always been a monetary, here it is Good Friday, 30 pieces of silver. But gold is it's the money of kings. Always has been and always will be. So
what do you think the proper gold to silver ratio should be?
I would just go back to what it's been historically. Eric Sprott wrote a letter to his people, his clients, whatever, everybody that gets it earlier this week, and he just talked about that historic ratio and how it is reflective of the actual composition of the earth, that there's roughly 16 times more silver than gold. So therefore that should be your mean that things would deviate from. So I would say that's what it should be, 16 to 1, 15 to 1, whatever it is. And if it is in favor of silver, you should probably own silver. At 35 to 1, it makes sense to be in more silver than gold. At 5 to 1, it makes sense to be in more gold than silver from a historic basis.
Okay, that makes sense. Now I wanted to ask you, do you think that there's any truth to some of the silver supply shortage rumors that are out there, as opposed to just mint pipeline issues being the problem right now?
Yes, I do. Maybe it's all anecdotal. Taken all as a whole, though, the pieces they're all pieces of the puzzle. And when you hear different dealers having one bar and 3 coins at the same time as the U.S. Mint not producing anything for the rest of the month or something, you get enough anecdotal evidence together, and you've got proof. You get enough circumstantial evidence together, you can say, okay, that's enough proof of the crime, even though it's all circumstantial. You get enough anecdotal evidence together, you can safely assume that there's really something to it.
Okay, thank you.
Thank you, Mulder. Thank you, Turd. The next question we have is from Unk Bobby.
I'm sorry. I think that's you paused because you couldn't believe you were actually saying that. You said, "Thank you, Turd."
It's a classic name. Go for it, Unk Bobby.
Exactly. Shakespearean, in a sense. I'm a real Renaissance man. All right. Anyway, go on. I'm sorry.
Hello, Turd. This is Unky Bubby. I have a couple of questions for forum member Aaron B. On Friday, January 21st, you put out an article entitled $1,600 Gold by June 10th, 2011 at your blogspot. I have studied further gold's price chart over the last 2 years. See attached chart if interested. There's some remarkable price and time symmetry involved. The June 10th, 2011 projected short-term top coincides with Martin Armstrong's cycle turn on Monday, June 13th, 2011.
Yeah.
And Chris Carolina's gold sonar model peak of June 7th, 2011. Both their models have gold and silver strengthening again in the fall of 2011. Question, do you expect a 6 to 8 week correction and as much as 15% correction on gold after June 10th? Expectations for this fall?
The short answer is yes. I can assure you that I didn't look at those guys' work when I wrote that. All I did was look at the past. Again, I'm a full believer, ardent believer in the fundamental story. And so as long as the fundamental story continues, then I would expect the cycles and the patterns to repeat. And so, yes, everything would point toward, and all I did was look at a calendar and cross off days. Everything would point toward a peak of some kind in that early to mid-June timeframe, just because that's what's happened in the past. Now, again, the wrench in the works is what could be going on in the COMEX in June in regards to the July silver contract, because if it's not a real long walk to get from the silver COMEX doesn't have any silver, then I wonder if the gold COMEX doesn't have any gold. And that could change that dynamic. And those waiting for a correction or those selling at 1,600 could be left, waiting for a pullback. But certainly the pattern would suggest, and you can just go back and look at last summer and the summer before that prices peak sometime around the 1st of June and decline into August, and then rally again until through the end of the year. And absent any fundamental change, be it the U.S. government getting some type of spending constraint or a collapsing COMEX, absent either of those two extremes, I would expect some kind of pullback. 15%. Let me just do the math. What's that? A couple $100? Without looking at a chart, if that's plausible, we'd want to go back again and look and see what was it peak to trough the last couple summers. That would be a guide as well.
That's $225, 15%.
What did I say it was? Did I say less than that? I'm sorry.
Yeah, a $225 correction on gold. That'd be pretty big.
Okay, so 1,600 something to 14. Yeah, it was certainly, again, every smarty pant top collar disinformation agent would be out telling you that you missed it and you got to sell, trying to perpetuate it and keep the Ponzi going. It would present a very compelling opportunity to buy at lower prices than we have today. And so if a correction develops, I would, I guess, again, answering your question, if a correction develops, I would look at peak to trough of the last two summers and pick a number. So maybe it averaged out at 15%, and you go 15%, and that comes out to be 14.10, and you just say, okay, if it starts approaching 14.10, I'm going to hold my nose and I'm buying. I don't care what everybody says and how bad it looks on that day. That's what we did at Turd's Bottom. Okay. I mean, again, I have my trolls, which I think is pretty funny, frankly. People that specifically, why they want to see me be wrong, I have no idea. But there are certainly people out there that, they think that, it was easy to go out there at 26.50 in silver in late January and tell everybody that was it. I mean, there's a blog post that I wrote on a Saturday morning. I don't know what the day was, late January, 20-something, called "The End is Near," and I put a picture on. I Google imaged to find a picture of the goofiest looking dude. Because these nuts. The cartoon image of the nut with the "End is Near" sign, is always some kind of weirdo. Mm-hmm. So I got to find that. And Google Images are great. And boom, and I found this, it's kind of strung out looking guy on the sign, because that's who I was that day. Because everybody thought, oh yeah, to sort of stick your neck out at that time. And now you look back and say, well, that was easy. It was right at the moving average or whatever. Wrong. Nobody was buying that day. And so it's not easy to call bottoms by any means. But if you have history as your guide and you figure past his prologue, it's a lot easier than it would be otherwise.
Okay. Thank you. Aaron has... I'm sorry, Jules, go ahead.
No, go ahead.
Okay, Aaron had a second two-part question that he wanted to ask, and it says, this past week, Bolivia has threatened to nationalize its mines. Question one is, as silver and gold appreciate, do you see the likelihood of more nations being tempted to nationalize their mines? Yeah,
that's a real concern. It kind of gets to some of the concerns people have had recently about the mining stocks not participating to the extent that you would think they would, given where the metals prices are. Frankly, that's got to be part of it. Bolivia was the one that was, and it was Coeur d'Alene and Pan American Silver that have big mines down there. That I can't remember what risk that is. That's geopolitical risk, or it's we'll call it nationalization risk. That you got to be mindful of in those stocks. And frankly, you almost have to, if you really want to participate in